Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 8, the group B exercises. Note, accounting is about understanding concepts and applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't get the concepts, then either email or telephone an instructor to get help with that understanding. Right, so we're picking up with 44. This is about 10 to 15 minutes, and 45 is going to be like 5 to 10 minutes, so I'm going to try to do both in this video. Let's see what we got going here. At the end of 2014, Jameson had total assets of $14 million and total liabilities of $9 million. Included in the assets were property, plant, and equipment with a cost of $12 million and accumulated depreciation of $3 million. Also included in the assets were $210,000 of patents, $1.4 million of goodwill, $318,000 of other long-term assets. During 2014, Jameson earned total revenues of $9 million at total expenses of $17 million. Number 1. Show how Jameson reported long-term assets on his balance sheet on December 31st, 2014. What is the book value of the property, plant, and equipment on that date? What is book value of? Okay, so reported long-term assets on his balance sheet. All right, so we're going to be looking at a balance sheet, but it's only going to be a partial, meaning it's only a portion, partial. It's only a portion of that particular balance sheet. Obviously, we don't have enough information in order to create a complete balance sheet. Right, so first things first. Let's see. Let's see, at the end of, okay, reported long-term assets on its balance sheet. All right, so show how Jameson Corp reported long-term assets. So it had total assets of $14 million, which we don't need to do that, and we don't need the total liabilities of $9 million. It has nothing to do with reporting the long-term assets. Included in the assets were property, plant, and equipment with a cost of $12 million and accumulated depreciation of $3 million. Right, so property, plant, and equipment would be $12 million, and the accumulated depreciation, so this would say less accumulated depreciation, of $3 million, okay, which would give me $9 million as my book value for my property, plant, and equipment. Also, all right, so that actually answers question number 2. What was the book value of property, plant, and equipment on that date? So the answer to number 2 is this $9 million. Right. Now, also included in the assets were $210,000 of patents, so we would have patents of $210,000. Goodwill of $1.4 million, and other long-term assets of $318,000. So my total long-term assets would end up being 10,928,000. Well, actually, it would go in that column. It would go in this column, 10,928,000. Okay, so this is how my balance sheet as a partial would look. Now notice that I don't have an underline under the total long-term assets, unless of course I was going to then have my total assets here. So that would be, my mathematical calculation for my, total assets, because this would be my long-term. I would have a total current assets here of some amount. Okay, so we'd add those two together. We get some dollar figure here, and that would be underlined here for my total assets. So that's just to give you a little bit more of an idea as to what your balance sheet as a partial would be. But notice that how I needed to know what my total long-term assets were. So I have the right-hand column, I have a mathematical calculation. I go one to the left, but I had to figure out my property, plant, and equipment of 9 million. So I move one more column to the left and put the sum total in the more right-hand column. Now, the solution, okay, which again, I'm not agreeing on the formatting of it, all right, because they're using single step, meaning they were going down one column, which was just fine, but then all of a sudden when they did the total, they bumped over and they did multi-step. Okay, so I don't agree with that. It should be, if you're going to use multi-step, then you should have had one column, did the math, that number went to the right, did the math, and then that number went to the right. Okay, just like we did here. All right, if you're going to use one method, you use one method. All right, you don't mix the two up. So let's move on to the next problem. And again, if this here is one of these things where this should be already secondhand, the only thing that you really are learning about, or you should be cognizant of, is how your long-term assets are being presented on your balance sheet. But realize that the underlying concepts were covered in earlier videos. Okay, 8-45. Right. Return on assets and fixed asset turnover ratio. The following is selected data for the current year. Calculate the return on assets and the fixed asset turnover ratio for the current year. Round your number to 2 decimal places. Okay, so if you'll recall from the focus on decision making section of the chapter, return on assets is equal to the net income divided by the average total assets. Okay, and remember, we're looking at average here. Okay, again, this here is concepts built upon concepts. All right, just as a quick aside, at the beginning of the video, I had said, we have concept A, right? You should have learned about that, and you should know that we're not covering it again, and because why? We're more concerned about concept B. Okay, well, this is the same exact case. All right, you should know how net income is already calculated. All right, that's concept A. You should also know how average total assets is calculated. Right, that's concept A. Concept B here, we're learning about return on assets. Okay, so we're concerning ourselves with concept B. If you don't know concept A, then go back and watch the theory videos. All right, so what do we have here? Okay, so our net income in this case here is 63,000, and our average total assets. So let me see here, total assets. Okay, so I have 408,000 plus 436,000, and that's all divided by 2. Okay, so that equals 63,000 over, let's see, 408 plus 436 divided by 2 is 422,000. And that gives me, divide 63 divided by 422, gives me 14.93% rounded. Okay, the problem does say round your answers. So if you don't round your answer on a test question and you wrote down 14.92, that's a wrong answer. Okay, round correctly. All right, so that's return on assets. Now, fixed asset turnover ratio. So the fixed asset turnover ratio is equal to our sales over our average fixed assets. So in this case, our sales are 821,000, and our average fixed assets are 305 plus 314, and we're dividing that by 2 because it's an average. So we get 821,000, and we're dividing that by 305 plus 314 divided by 2 is 309,500,000, and then that equals 821 divided by 309,500, and that gives me 2.65. Okay, so that's my fixed asset turnover ratio. Okay. And that's it for all of the exercise problems from this particular chapter. And in the next series of videos, we will be working on the problems from Group B. But again, if you're not getting the theory, go back and watch previous videos and realize that we're taking concepts and building upon those concepts. So if you don't understand the underlying concepts, go back and relearn it, okay? And then if you still don't understand the current concepts that are being taught, go back and watch those theory videos. And if along the way you're missing something, feel free to contact an instructor, okay?